Take two.
Yeah. Hey everyone, on today's show we have Tim Kerley, Senior Mortgage Advisor with Fairway Independent Mortgage Corporation. Tim is a returning guest, and on the show, he always has some great tips for people looking to buy a home and help get them ready to prepare for getting a loan. Tim, thanks so much for being on the show again today. One of the things our listeners love to learn about is what do they need to do to prepare for the home buying process. What advice would you give for that?
Well, thanks, Mike. It's good to be back with you again. It's a interesting time that we're in now in the real estate business. But as always, and I always say, like when you're thinking about buying a home, there's always talk about interest rates. Everybody wants to talk about rates. Everybody wants to talk about home prices and that sort of thing. But for most borrowers, pretty much every borrower, really what you're concerned about is how much is your monthly payment going to be and how much do you need for closing. That's the two things that everybody wants to know. It's like that you can forget about rates and all that other stuff. That's what we want to know when we're buying a home. So, um, if you're thinking about buying a home, the first thing you would want to do nowadays is contact a lender and start a pre-qualification process. You will just and all that involves typically is you're just giving the lender some basic information. In most cases, they're probably going to look at your credit. They might ask you to give them some basic documentation like your W-2s and your pay stubs. And that'll kind of put you on the road to figuring out like exactly what you can qualify for. And there are so many different programs available today. It'll help them understand too, and help you understand what programs you might be eligible for, especially if this is your first home or you haven't bought a home in a while.
So let's talk about that. So let's say someone is a first-time buyer. What type of loan products are available to them? A lot of times people will ask, if there's like first-time home buyer products out there and that sort of thing. And so what do you usually tell people in that situation?
Yeah, so I could go on and on, honestly, with that question, because there are a number of different programs that are suitable for first-time home buyers. Some of them you have to be a first-time home buyer. Some of them you don't have to be a first-time home buyer. Some of them have income caps on them. Some of them don't have income caps. Some of them offer down payment assistance. Some of them offer rate subsidies or subsidies on the mortgage insurance. So there's just a lot of different directions you can go with that. That's one good thing I think that is happening in our market now because there's a lot of extra lending options available right now that weren't even available even a couple years ago, I guess I would say.
Okay.
So I mean, like there's programs where you can do, 3% down, you can do 0% down. There are down payment assistance programs that you can look at, all kinds of different directions you could go.
Awesome. And so, ideally, then, if somebody were to meet with you, you would basically counsel them based on their current financial situation. They would meet with you, and you kind of map out kind of like which options are best for them.
Absolutely. Yeah, for sure. And I mean, just to give you one idea, and one of the programs we use probably most often is a program offered through North Carolina Housing Finance Agency. Actually have they have several different programs, but they have a couple of down payment assistance programs. So if you're a first time buyer, that's a really good place to start. If you're eligible for the program, both of their down payment assistance programs are income limited, although the income limits are pretty healthy, but you got to be in that income range to be eligible for the program. But you compare that program up with a standard mortgage, which would be either a conventional mortgage or FHA or VA if you happen to be a veteran. And you can put that together with one of those programs and use the down payment assistance or not use the down payment assistance. But yeah, you're exactly right. That's what we would do. We start with a pre-qualification, gather some basic information, get your income. Do you have any money for a down payment? We'll look at your credit and see, where that might fit. Um, Let me also say there too, my approach is always if your credit is not in a place where you can qualify for a home loan right now, that doesn't mean you can never qualify for a home loan. So I always tell my clients that. I mean, the answer is always going to be approved, or pre-approved, ready to roll, or maybe you need to wait a while. Maybe you need to work on this, that, or the other. It might take a few months or whatever, and what we'll do is we'll map you out a plan. If you're not where you need to be right now, we'll figure out a way to get you where you want to be at some point in the future. So you can get there. Just might take some work sometimes.
Typically, let's say somebody is in a pretty good position and they have a good credit score and everything. What's the timeline on the process for someone to apply for a mortgage through you and go through the approval process? What's the timing of that?
Yeah, so the approval process itself. So let me say, like, the first thing we're going to do is a pre-qualification. Again, we're just gathering the information, pulling the credit. And for the clients that I work with, almost everyone, I like to go ahead and gather all the documentation and get that file in front of an underwriter so that we're fully approved. And that does a couple things for you. Number one, it puts you a little bit further down the road. So if you get into a situation where you need to close really fast, you already have that stuff done, because we're gonna have to do that stuff anyway.
Yeah.
And so it can make your offer a little bit more competitive, and it can make the process a little smoother for you. It'll take some stress off of you once you get into the whole process with the contract. But back to your question, like, once you submit your documents, that underwriting process usually takes about, I'm going to say, 2 to 5 business days, something like that. So once we get it to an underwriter, it's really just a couple days.
So ideally, then you'd want like before someone's really ready to start looking at houses and that sort of thing. After they meet with you, they probably would want to maybe mentally give themselves about a week or so to before they start looking at stuff. I always say you want to try and get that pre-approval letter early on in the process, because you don't want to fall in love with something, from a house standpoint and then not be able to get it. And that's sometimes, and then you're always going to compare whatever you're looking at to that. So I always say, get that pre-approval first, and then we'll start looking, because, sometimes, the numbers don't work, and sometimes you can be surprised, and, maybe you can afford more than what you think. And then it's also okay to not borrow up to the maximum too. I mean, just because it says that you can do that, let's say, if it says you can buy a $400,000 house, but the monthly payment for you personally feels more comfortable at 350, then I think that's better. And so I think it's really good that you're able to help people through that process and kind of teach them how to have that comfort level.
Yeah, I'm glad you brought that up too, because that is usually the first conversation I have is, what is your monthly payment budget? Because most people, when they start talking with the lender, they say, I want to find out how much can I be pre-qualified or pre-approved for. So, I like to kind of turn that conversation around and say, where do you want your monthly payment to be? That's the most important thing, because if you can be approved up here, but you can't sleep at night if you're here,
Yeah.
we need to find out, like, where is the cutoff where you say, I couldn't take it if my payment was more than X, whatever that is. And then we kind of work backward from there. And we can back into it and say, okay, if this is what you need for your payment to be, based on whatever your down payment is and what your credit is, that's going to lead us to such and such a program. And from there, we can figure out, this is what your purchase price range roughly is going to be to keep you in that payment range of where you want to be.
No, it makes sense. All right, super. So another time, I think a lot of things another reason I think that has been holding back the market a little bit is that oftentimes clients have a home that they need to sell before they can buy something else. Or at least they'll feel more comfortable if they sell their house before they buy something else. Um, are there any loan products out there that can kind of help with that, where like maybe somebody could, buy the house that they want first and then close on it later and that sort of thing? Like, are there products like that available out there?
Yeah. The old fashioned bridge loan is kind of coming back. Before I got into mortgages, I was in banking, and we used to do the the short-term notes long time ago, with the bridge loans and that sort of thing. And you don't find many lenders that do that nowadays. But there are some companies out there that are partnering, I guess I would say, with lenders to provide some type of bridge financing. So that would be the first thing. I always counsel my clients, though, probably the cleanest thing would be if you can buy the new home, even with a small minimum down payment without selling your other home, if that's what you want to do. I mean, that always helps you from a competitive standpoint to not have to have your offer be contingent on selling your old home. But if
Definitely.
you can buy the new home, you're going to have a small down payment on the new home. You've got to be able to cash flow both mortgages if you have a mortgage on the old home. So if you can support that, then what you could do is once you sell the old home, you get the proceeds from that sale, you can apply a principal reduction payment to your new mortgage, and then you can do something called a recast. So, and that all that means is you're asking your mortgage servicer to recalculate the payments based on the new balance after you've applied the principal reduction payment. So a couple things I will say, that's a really good strategy, and that beats having to go back and do a whole new refinance on the new mortgage, because that would be your other option. So a couple caveats I would say there is that will only work on a conventional loan. You can't do that on any of the government programs. And the other thing is sometimes it comes down to who is servicing your loan, because different servicers have different, guidelines about how they do that and whether they will allow that. So if that's a strategy that you're going to pursue when you start working with your lender, that's a topic you want to tackle right up front and ask them, like, am I going to be able to do a recast on this? And
You want
how does that all
to make
work
sure
with?
they can do that for you.
Yeah, absolutely. I mean, you could always do a full-blown refinance later, but then you have to do the fees all over again, and
Yeah.
that's no fun.
But I do feel like it's, it can be a lot cleaner for buyers if they, if they can afford to buy the next house without selling their other one. At least in the current environment, I think the way, as quickly as most houses are selling, um, it's nice having that cushion between houses, I think sometimes. Um, sometimes it may limit someone that's maybe buying at the top of their, affordability scale or whatever. But I think if someone's being, prudent about what they're buying, then yeah, I think it can be a really good plan. Full disclosure, I did that when we bought our last house,
Yeah,
and so we ended up recasting the loan, and it was really a good way to go because you don't, I didn't want to just put a small amount down, but by after we sold our other house, we were able to add to it, and it felt a lot better being able to do that.
yeah. Let me say, I'll say too on that. Like the recast, if you want your new mortgage payments to be lower, you don't have to do the recast. That would be an option for you to do the recast. But if you sold the other home and you took the cash proceeds from that and you paid a principal reduction on the new mortgage payment, you could also just do nothing, and it won't change your payment. It just means you'll pay the loan off earlier. And, some people are okay with that. But if you
Yeah.
want the payments to be more in line with what they should be on a mortgage of that size, that's where the recast would come in. And again, typically the fees on that are a few $100s, depending on the servicer,
It's a lot
and what
cheaper
they,
to do that than it would be to do a full blown refi, correct?
for sure.
Okay,
Yeah, for sure.
awesome. Another issue buyers sometimes have is that it can be difficult to buy a home that needs a lot of work. Let's say, people watch the HGTV and they want to buy a fixer upper and go in and buy it. And, sometimes a house that needs a lot of work can be difficult with, if you're getting an FHA loan or a VA loan or even some conventional loans, depending upon how rough the house really is. And for a long time, there weren't many products that were really helpful that way. So you'd either have to pay cash for a house like that, or there were some loans out there, but they were a little bit clunky, and people really didn't want to deal with them. Is there anything available now to make that process a little smoother?
Yeah, there are some renovation loan programs, and just like you just said, like the old FHA 203K program has been around for many years, and that's probably the most used program. Um, but it works really well in a situation like that. So how it works is if you were buying, let's say you were buying the home for $250,000 and it needed $50,000 in work. So your acquisition cost is now 250 plus the 50,000 in repairs or renovations that are needed. So your acquisition cost will be 300,000. So your down payment. So instead of you assuming the home was financeable, instead of you buying the home for $250,000 and having to do a 3.5% down payment, plus come up with $50,000 to do the work, you can lump all that together and your down payment is based on the whole acquisition cost. So your 3.5% down payment would be based on the $300,000.
Okay.
Far less than coming out of pocket with the down payment closing cost plus the $50,000. I had something I was going to say earlier and it went away and now it just came back. What I was going to say was I think these programs have been around for years and years, and it's almost like the current market I think has made all of us learn the programs and really understand how they work and start using them more and more. But yeah, there's the 203K conventional loans also have renovation programs as well. So again, it allows you to finance the rehab costs in with the loan.
Okay.
So let me also say here too, like it's a great program and it works great, but if you're planning to do that, be prepared because that program, any of these renovation programs are going to be a lot more involved than a regular mortgage. This is not going to be a 30-day closing generally because you've got to get a contractor involved. You've got to get, depending on the scope of the project that you're doing, you may have to get plans and specs and you got to get multiple contractor bids and all this stuff. So it's definitely doable. It's a great program and it's a great way to take a property that is maybe not marketable right now and then turn it into what you want. But it does take a little bit longer.
Gotcha. Is there anything else that we didn't get to talk about from a loan standpoint that you wanted to make sure we got to cover?
Um, the only other thing would be um, temporary buy downs, which
Okay.
is also something that has been around for many years. And we've never really, lenders haven't used that. It hasn't really been something that's been important in the market until the last few years. But with the higher rates, that is something that's available now. So if you're a home buyer, it's something you could think about. So you can do a buy down in a couple different ways. You can do a permanent buy down, which just involves you paying some points. And if you're familiar with the mortgage process at all, what you're really doing there with paying points is you're paying some of the finance charge in a lump sum at closing in order to get a lower rate and a lower payment over the life of the loan. So that's a thing. You have to figure out what your break even point is there. But that's a thought. The other thing would be a temporary buy down where you are buying the rate down for the first couple or the first few years of the loan's life. So for instance, let's say a 2-1 buy down. That's probably your most popular buy down. So let's say the rate is, I'm just picking a rate out of the air. If it was 7%, your payments for the first year are based or calculated not on a 7% rate, but on a 5% rate. It's 2% lower than the actual note rate. The second year, the payments go up and they're calculated based on a 6% rate. Then the third year, they're based on your normal note rate for the rest of the term. So there's a cost associated with that. In many cases, that cost could be paid by the seller, could be paid by a builder if you're doing a new construction. And so what's really happening is that there's that money is being subsidized or it's being set aside to subsidize those monthly payments for the first however many years of the loan life. So again, I'll not get too deep in the weeds on that program, but just know
Sure.
that is something that's available
That's important because I think there's a lot of people that are holding off on doing anything because hoping that rates are going to come down. And, obviously we don't know, we don't have a crystal ball to say what's going to happen or whatever, but I don't, I don't see rates going back to what they were in 2020, 2022, in that time frame for a long, long time. I mean, that was historic in that time period. And, something bad, I think, would have to happen for them to go that way again. And I don't know if I want to go through
Another
that.
pandemic.
Yeah. So that being said, like I think people, it's hard to come to terms when, when it was only a short period of time ago where you could get what was viewed as a really good deal then. But historically, we're actually in a kind of a Goldilocks zone now where, you kind of look at history and, where things are flowing. Um, it's not terrible. There's definitely been worse, but I think, but a product like that really can help kind of soften the blow, at least for a period of time. Um, and make a home feel a little bit more accessible so people aren't as strapped when they first start making their payments.
Yeah, and I mean, if you believe rates are going to come down, I mean, I think we all believe rates will come back down someday in the future. Who knows when that's going to be? But if you did a 2-1 buy down, I mean, you got a couple of years there. If the rates were to come back down, you could refinance and take the lower rate. The other thing that's really good about the temporary buy down as opposed to the permanent buy down, like when you do permanent buy down, whether you pay the points, the seller pays the points, or whatever, um, if rates were to drop significantly and you decided to refinance within a short period of time, well, that money that you paid for the points is gone. You're not getting that back. Whereas with the temporary buy down, the money is being used to subsidize your monthly payment. So any money that hasn't been spent, depending on how far you are into the buy down period, then that would just be credited back against your payoff. So you don't
Okay.
lose anything either way. If rates
Yeah.
do drop, you're still in a pretty good spot there. So that's one of the things I like about the temporary buy down. It does get a little tricky sometimes because if the seller's paying any of that money, that has to be considered as part of their interested party contributions, and there are limits around those depending on which
Okay.
program you're going with. So you have to be careful on that. And then, some lenders require that the seller pay the whole thing. Some lenders might allow the seller and you as the buyer to split it at some way. Some lenders might allow you to pay for the whole thing if you wanted to as the buyer.
Yeah.
But it's there. It's another tool that could possibly be used.
That's good. And I think it's just important at this point to, I think what's important to me at least is I don't want people to shut the door on the possibility of being able to do something, that to know that there's options out there to help with trying to get a mortgage. And maybe there's people that could qualify for something if they just package it a different way. And that's why I think it's really important to make sure you talk to a lender to know where you stand and just to get that comfort level. So don't be afraid. Anybody that's out there, don't be afraid to talk to a lender. I think I hear sometimes people worry about credit pulls and they don't want to hurt their credit or whatever. And your lender is going to take care of you and make sure that they'll advise you on how it can affect you. But talk to them first. They're not just going to randomly pull your credit and knock your score down right away. So you can speak to that better than me, but I just always, that's always one of the things I get from people like, well, I don't want to pull my credit because I don't want it to hurt my numbers or whatever. But, what kind of effect does that have?
Yeah. It, I mean, I think it depends on what your credit score is. And I always tell my clients, I mean, if you have a super high credit score, it's a few points. It's probably not going to matter anyway. I don't really know how many points it knocks it down. If you're borderline score wise between one program and another, then you probably would want to be careful. But the bottom line is, if you want to buy a home, you got to do this to figure out the answer to that question. So it's like, you're not going to get. Now, let me say also, most lenders can nowadays do a soft pull on your credit. So, they can take a look at your credit it's not the full credit report, but they can do that without it hurting your score. A soft pull is just it's a I guess a lower level of credit report that does not affect your score.
Okay.
So, if you're in a situation where you're unsure and you're thinking you might be borderline, then maybe, work with a lender that can do a soft pull first. Make sure you're okay there. Because at least that would give you some idea to start with. But I
Okay.
mean, once you get into the full underwriting thing and everything, I mean, the lender's going to need to pull the full credit report.
No, good point. So that's all I had on my end. Did you have any questions for me? A lot of times I always throw it back at the person I'm talking to kind of talk about what's going on in the market. And so, is there any questions that you had for me?
Well, all the talk nowadays, the buzz for the past few months has been all this the change up in real estate agent commissions. So I guess I would ask you, like, how do you think that's going to affect us, you, the average consumer, and all of this in the news is like this is going to help home prices come down. Do you really think that's going to help home prices come down?
I really don't. The short answer of that part, I don't see how it's going to have that much of an effect. But I think in order to answer it fully, I kind of have to take a step back and kind of like, so in case anybody's not aware of kind of what we're talking about. And so in the last couple of years, there's been a lawsuit, like a national lawsuit, about buyer's agency compensation and sellers feeling like they shouldn't have to pay it. And so, and the way that the way that things have worked over the last, as long as I've been an agent, and probably way longer than that, is a person would list their home for sale, and the agent and the seller would agree on compensation for the sale. And typically, the agent would then share part of their commission with a buyer's agent if they were the ones to bring a buyer to the table. And that's kind of how it's worked over the years. And, I think for the most part, it's worked pretty well. But I think over time, I think there's been some sellers that felt like they shouldn't have to be paying for the other person. And so there was a lawsuit, and a part of the settlement from the lawsuit is that I think it seems like they're trying to separate it out, where like the idea would be the buyer would pay for their agent and the seller would pay for the other agent. And without going through like this, huge brief or whatever, but for the most part, what's happened is typically, as an agent, when you would list a property in MLS, which is where basically, and to take another step back, I guess, for people that don't know what MLS is, so the multiple listing service is the MLS, and that is where me as an agent, I list a property and I list my property in the multiple listing service so that other agents know that this property is for sale. And also, up until now, the reason I would list it in there was to say, and my seller's willing to offer this much in compensation, or really, I'm willing to share this much money of my compensation with you for this property. And so going forward, though, the way this lawsuit's going to work out is that you're not going to have that in MLS anymore. So now the agent, if you have a buyer, you're going to have to, the buyer's agent is going to have to reach out to the listing agent to ask what if they're offering any compensation. And sometimes they may, sometimes they may not. And so then at that point, then if I'm a buyer's agent and my buyer wants to buy a house where there's compensation is not being offered, then the buyer and I are going to have a conversation and say, well, we're going to have an agreement for how much I'm going to get paid. And there is no set number. But there is, each agent has a number that they're comfortable working with a buyer for. And so I think the positive of this is that the buyer is really going to know what the number is that the agent's getting paid. And we've had buyer's agency in North Carolina for a long time. So I feel like, we've done a pretty good job of this over the years. So to me, I don't know that it's really going to change all that much because, again, we've had buyer's agency. If you do a transaction with an agent in North Carolina and you're a buyer, you're going to have a buyer's agency agreement with your buyer's agent and know what they're going to get compensated. And so that's just going to continue. But I think the way this is going to play out is that we're going to have that talk a lot more and a lot earlier in the process. A lot of the times you were just assuming that you're going to get paid as an agent. So you kind of would just say, yeah, I'll represent you, and just kind of go along figuring that assuming you're going to get compensation. So now you can't really assume that. So the buyer is now going to have to know how it's going to affect them. My concern with it is, my worry is that there's people that maybe if someone doesn't offer buyer's agent compensation, and let's say I have a buyer and they don't have the money to make up the difference for my compensation, then they may choose not to have a buyer's agent and then not have representation on their side. And so that's my concern with this. There's a thought process going on around town or around the country saying, oh, well, that money's now, nobody has to pay that money anymore. And it's like, and maybe that's true, but a listing agent is going to have to still agree to list a property for a number that is going to compensate them properly. And a buyer's agent is not going to want to work with someone unless they know they're getting paid. So for someone to be in this business, there's not just some magic wand where like agents are showing properties and some magic person that's paying them money to do that. For the most part, agents are independent contractors, and they only get paid when they sell something. And so the positive of all this, I think, is that buyers are going to know how people are getting paid, how the buyer's agent's getting paid, how the listing agent is getting paid. And I think there's going to be a lot more transparency. So I think that's the positive of it. And long story short, to the original question, I don't know that a lot really is going to change. I think there's, a lot of people have taken up a lot of time, and a lot of lawyers and people have made a lot of money off of this, I think. And, but in the grand scheme of things, I don't know that it's really going to change anything, in the grand scheme of things. This is not going to lower house prices. The only thing I think that would lower house prices is more inventory, and there being more inventory than there are buyers out there. And at this point, there's still not enough new construction to make up the difference. Now, there is a lot more inventory now, I would say, than there was this same time last year, but it's still historically technically considered to be more of a seller's market than a buyer's market, even though there's a little bit more competition and the market's kind of a little bit frozen due to the whole interest rate thing. So I know I talked a lot about a lot of different things and went around in a circle, but hopefully that makes sense. If you have any follow-ups or clarifications you want me to make, I'm happy to do that.
No, and I mean, I was just telling you, I spent some time reading up on a lot of this stuff this morning. I mean, from a lending standpoint, it's not going to change really anything except for VA loans. We're waiting on some guidance from VA on that right now. But I had the same thought, most sellers, if they didn't have to pay another agent, they're probably not going to say, well, I think I'll lower the price of my house.
Yeah.
That's probably not going to happen. So
maybe it will, I don't know. But again, there's also going to have to be an agent that's willing to do the job for less. And so I think that's where it's all going to come down. I think, it may cause disruption that we're not expecting. So I think for now, I don't know that it'll change. There may be some people out there that may come up with some some better mousetrap or, a better way of doing things, maybe, I don't know. But in the grand scheme of things, there's not a lot of jobs out there. And again, like I've said, we do well. Like when a deal closes for an agent, we do well. And we don't complain about how much money we make. And when people see it, sometimes they're like, oh, wow, agents do really, really well. They're doing all this, and all they do is open the door for people. And I think that is a mischaracterization in all the things that we do behind the scenes, that we don't really do a good job of telling our story sometimes, and all the things that we do behind the scenes to kind of facilitate and make sure everything goes smoothly. And it comes off like it's just so easy or whatever, but it's goes easy because we have the experience and knowledge and are able to help guide the process to make it go easy sometimes. And sometimes it doesn't go easy, and that's a whole different thing. But
Yep.
in the grand scheme of things, we really are, as a career, I mean, like, we don't get paid. There's a lot of times where, buyers, will work with a buyer agent will work with a buyer, and they'll show them 30, 40 houses. And at the end of the day, the buyer says, you know what, I think I'm just going to rent now. And that agent makes nothing.
Yep.
That's one I always tell, when I interview new agents. I say the thing I love about real estate is that there's no one that can put a cap on how much money I make as an agent. And a lot of careers that are out there, you make this much money if you're in the job for this long, and it doesn't matter how good of a job you do, that's just how much you're going to make. And in real estate, that's not the case. There's no one that can say how much, there's unlimited money to be made. If the more people you help, the more business you do, you can make an amazing life for yourself, but you can also make nothing.
Yeah.
And so, and that is the risk that we're willing to take to get paid the way that we eventually get paid. But there's a lot of times when we get nothing.
Yep.
And again, so, maybe there's a better way to do it down the road, and I guess time will tell. But for now, I think, hiring a real estate agent sometimes is one of the best bargains that you can even do, because again, you're not having to outlay anything out front for the most part. The agent's taking all the risk, knowing that eventually they're going to get paid, hopefully, and hoping that they're going to get paid, hopefully, because if we don't sell your house, we're not getting any money. And if we don't help you buy a house, then we don't get any money. And we're okay with that. We've come to terms with the fact that that's okay. But I think a lot of people just think that, there's just all this money that's going to real estate agents, but they're only getting paid unless they actually close on things. And so I think we need to tell our story better. And hopefully some more people will be able to start doing that, and not make it about, the flashy lifestyle that they show on television. That less than 1% of 1% live that life. The average agent, is, can do well for themselves, but it's, I think I read a statistic recently that last year, more than 50% of agents, I think, and I may be off slightly, but I think 50% of agents did one deal or fewer last year.
Wow. Yeah.
So it's kind of tough. And so, and again, it's a tough business, and there's no sugarcoating that. But you need someone that's knowledgeable, that's going to be on your side, and walk you through the process. And that's why, people hire us, and that's why we lean on people like yourself as a lender that we know we can, that we know, like, and trust, that we know we're going to take care of our clients, and make sure that, we hopefully have a smooth transaction. If they do the things that, you tell them to do, and they do the things that we tell them to do, and help them along the way, then it does go smooth and does go easy, and make it seem like it's all easy money, even though, all the things we're doing behind the scenes is
That's
why
right.
it's like that.
Right.
So,
And home buyers, let me say, home buyers, especially if you're a first-time home buyer, just my opinion, you need an agent in your corner, because if you've never done this before, or if you have done this before, you're buying a home and I always think back to like when I bought my first home, which was 30 years ago. Like we didn't do home inspections or any of that stuff back then. And so you have so much more at your disposal, but you need an agent to like help you figure out like what inspections should I do. You need an agent if if there are repairs that need to be done. Like, could this be a problem down the road? Do we need to ask for this to be fixed? Like, you need somebody to negotiate with that seller for you to make sure you come out okay in this process. Again, just my opinion. I might be biased, but I
No,
really believe that. I truly believe that is true.
I definitely am. I mean, even like I'll go back to times when I'm in the business and I've bought and sold several houses on my own as a buyer's agent for myself and as a listing agent for myself. One of the things that agents are able to do is to kind of cushion the blow a little bit when things get weird. The agent's been through this before, and so when I deal with someone else and we have something that comes up on a home inspection, and like kind of like I know how it should go, but when I do it for myself, even like it's like, oh man, I'm buying this house and there's all these things that are wrong with it. I don't have that person to say, all right, it's normal, but here's, these are the things we can do. We can ask for, and like walk you through that process. And you don't have that person to lean on to kind of like level you. And so, even myself, sometimes I'm like, man, should I have hired an agent? But, it usually works out, but, it's just something to really consider. And it's nice having that person to advocate for you. And
Yep.
anyway, so. But Tim, I appreciate you being on the show and for everything you do for us and for everything you've done for our clients in the past. If anybody needs a lender, please reach out to Tim. I will list his contact information in the show notes. So if anybody wants to reach out to Tim, you'll be able to do that. You want to list your phone number or give a shout out or whatever, I guess right now for how someone could reach out to you.
Sure. Yeah, my phone number, and this is my cell number, so you can text me, call me, or whatever. It's 828-310-9251. And if you Google, you can find me on social, LinkedIn, Facebook, Instagram. It's all out there. So I think you can pretty easily, and my website, you can pretty easily find my contact information.
Yeah,
But be
and
glad to help.
Tim does a real good job. He does some helpful videos about the loan process and everything. So he's really, really big on social media. So please make sure you follow Tim. And if you need help with anything mortgage related, definitely keep him in mind. So until next time, see you soon. Thanks again.
Thank you.